Hey everyone, welcome back to the channel. Today we're diving into a story that's shaking up the tech world and Wall Street. A Chinese AI setup called Deepseek has just dropped a bombshell that's sending shockwaves through the global tech industry. Shares of major US tech companies are tumbling, and investors are scrambling to figure out what this means for the future of AI. So, what's going on? Let's break it down. Last week, a relatively unknown Chinese AI company, Deepseek, launched a new chatbot app. And guess what? It quickly became the most downloaded free app in the United States, overtaking big names like ChatGPT. But here's the kicker. DeepSeek says it developed this AI model for just $5.6 million. That's a tiny fraction of what US tech giants like OpenAI, Google, and Meta are spending on their AI projects. We're talking hundreds of millions or even billions of dollars compared to DeepSeek's small budget. This low-cost model has raised serious questions about the future of America's dominance in AI. If a small startup can create a competitive AI product for so little, what does that mean for the massive investments US companies are making? Investors are starting to wonder if the US tech industry's lead in the AI is as secure as they thought. The market reaction was immediate and brutal. On Monday, US tech stocks took a huge hit. Chip giant Nvidia, whose stock has been on fire for the past 2 weeks, fell by 12%. Meta and Alphabet, Google's parent company, also saw sharp drops. Even companies that supply AI chips and data center infrastructures like Marvell, Broadcom, and TMSC weren't spared. The tech-heavy Nasdaq index plunged by 2.3% and S&P 500 fell by 1.4%. Why such a big reaction? Well, tech stocks make up a huge chunk of the US stock market, about 45% of the S&P 500, according to analysts. So when tech stumbles, the whole market feels it. Investors are now questioning whether the massive spending by US tech companies on AI will actually pay off or if they are just overspending. But the fallout didn't stop at tech stocks. The news also sparked a massive shift in investments across other sectors. Energy companies, which have been booming because of the huge amounts of electricity needed to power AI centers, saw their stocks plummet too. Constellation Energy, which is planning to revive the 3 Mile Island nuclear plant to power AI, fell nearly 20%. Competitors like Vistra and GE Vernova also dropped sharply. Even natural gas and oil prices took a hit, with natural gas futures falling by 9%. And if you're into cryptocurrencies, well, Bitcoin and other digital assets also tumbled. It seems like investors are rethinking their bets across the board. Now here's the big question. Is DeepSeek's breakthrough as game-changing as it seems? Some experts are skeptical. Sure, DeepSeek's R1 model is impressive, but it's still a consumer-focused chatbot, a competitor to ChatGPT. It hasn't yet proven it can handle the more complex, industry-specific AI tasks that require massive infrastructure investments. And let's not forget that the US still has a huge lead in artificial intelligence, talent, and capital. As one AI market expert put it, thanks to its rich talent and capital base, the US remains the most promising home turf for the first self-improving AI. So while DeepSeek's achievements is impressive, it might not be enough to dethrone American AI leadership just yet. So what happens now? Well, this week marks the start of earnings season for many tech companies. How they respond to the DeepSeek news could lead to even more market turbulence in the coming days and weeks. Investors are also taking a closer look at Chinese AI companies, which have been undervalued due to geopolitical tensions and weaker global demand. DeepSeek's rise could spark renewed interest in these companies. As one strategist said, DeepSeek's rise could provide an alternative growth story for investors. In other words, don't be surprised if we see more money flowing into Chinese artificial intelligence startups in the near future. Finally, let's talk about whether this market sell-off is an overreaction. Some analysts think it might be. After all, one breakthrough, no matter how impressive, doesn't necessarily mean the end of US artificial intelligence dominance. And let's be real, a massive shift from US tech giants to a Chinese startup is unlikely to happen overnight. As one market strategist puts it, Time will tell if the Deepseek threat is real. Markets may have been looking for an excuse to pull back, and they got a great one here. So while the news is definitely a wake-up call, it might not be the end of the world for United States tech companies. So there you have it. A Chinese AI startup has thrown a wrench into the global tech industry and the market is feeling the shockwaves. Whether this is a temporary blip or a sign of bigger changes to come, only time will tell. What do you think? Is DeepSeek a real threat to United States tech dominance, or is this just a bump in the road? Let me know in the comments below. If you enjoyed this video, don't forget to like, subscribe and hit that notification bell so you never miss an update. Thanks for watching and I'll see you guys in the next one. Bye.